We'll now have a panel discussion on financial inclusion, and all our speakers just joined, and we've got an excellent line of speakers. The panel discussion is sponsored by Nexus Risk Solution, and will be chaired by Eddie Keel, industry leader at IBM, and Eddie is also the chair of TQK's Financial Inclusion Working Group. So thank you very much for all our speakers joining this session, and thank you very much for Eddie for leading this discussion. Eddie, the floor is yours.
Thank you, Hugo. You could have a little time off now. Does that suit? Excellent.
Almost.
I suspect Hugo's been working very hard all day. I keep getting these emergency notes through saying things are not going technically the way that he would have wanted. So there's no need to stress, Hugo. We'll be fine without you for a little while if you want to put your feet up. It's also a very British time for afternoon tea. It may not work in France, but you have a crack at it. It'll be good for you. So welcome to this final session. We have an excellent panel for you. We have a rather challenging headline for it, or title for it, which is Financial Inclusion: How to Unlock Digital Finance for All, which presupposes that the solution is locked away somewhere and somebody's got the key. So we're going to have a fairly relaxed amble through some of the challenges and see if we can identify either who's got the key or where the key is and what do we need to do to turn it in the lock. I'm delighted to be joined by the best panel of the day. We know that because we've been watching all day, and this is clearly far superior. We have Jill Doherty, who's the UKI Head of Business Development at Visa. Welcome, Jill. And Nina Kirkes, who's the Director of Consulting at LexisNexis Risk Solutions. Welcome, Nina. Bim Afalami, who's the MP for Hitchin and Harpenden, and has probably got far more important things in his calendar, but not on his personal agenda. No, exactly. This is where you want to be. So thank you for being here, Bim. We look forward. And Faith Reynolds, who's the Director at Devon Fields Consulting. I've kind of deprived the panelists of each giving a little pitch at the beginning because I didn't want it to be too formulaic. What I thought we'd do was go back to that question about unlocking and give them all a chance to talk widely about it, or talk about it in the broader sense. This issue of financial inclusion is not new. It's not something that's arisen because of COVID. It's not something that's arisen in this generation. It's something that's been with us and with every other economy and country and market for forever, really. And so my question is more general. It's why haven't we solved this before? Why does it still exist? And if you want to, feel free to talk about what your personal viewpoint might be on what we need to do, but or what your company might be able to, your organization might be able to bring to it. But you know, it's not hard. An awful lot of people are clustered around the same topic. We've had a conference about it all day. How come this hasn't been solved before? I'm going to start with Nina, if that's all right. We did agree a running order, but we'll be flexible. So if we do kind of clockwise from my perspective, it'll be Nina, then Jill, then Faith, then Bim, and go for it. So Nina, why have we not solved this before?
I mean, that's a very good question, Eddie, and hello, everybody. So I guess we can't say that there was no progress made. So there is progress that has been made indeed. And financial services have increasingly been accessible to individuals and businesses. And when we talk about financial inclusion, I think it's very important to talk about businesses as well as individuals. Access to current accounts, I guess, is the first step in financial inclusion. And in essence, this kind of facilitates our day-to-day lives. As account holders, we are more likely to use other services. We're more likely to invest in education, invest in health, and so on. So some of the latest statistics tell us, and these are coming from the World Bank, that there has been movement in this space over the last 10 years. So 1.2 billion adults have gotten access to accounts over that time frame. So 70% of global population now has access to accounts. So they are a financially included society. However, a huge number of people, a third of adults, still don't have access to just some basic services. Now, what we've seen over the last few years is many fintechs that are actually trying to bridge the gap by bringing individuals and businesses in from this kind of financial cold, and they're trying to ensure access to basic services that can unlock the opportunity and improve life chances beyond the basic economic needs. What I want to also mention is that at an individual level, having access to financial services and that financial inclusion is a basic human right. Okay, so it's not being extended nearly fast or far enough as we would want it to. And whilst you said COVID, it's not new. It didn't happen in COVID. COVID doesn't make it better. In fact, it has made it that much harder. And it isn't a purely humanitarian issue either. So the kind of unbanked and underbanked communities tend to suffer worse financial, social, and health outcomes. And ultimately, at the end of the day, everybody pays. And I'll close shortly and allow other panelists to mention, but it's kind of no good leaving the most vulnerable behind whilst we are growing economically across the globe. So we need to think about the most vulnerable. And we need to look at how we can address the issues of financial inclusion, but actually access to financial services, a part of that, has been an issue in itself. So to gain the access to services, you need to have a credit background. And to build a credit background, you need to have the access to financial services. So we kind of face a bit of a chicken and egg situation. And with that, financial inclusion requires compromise. And where we as a business, so LexisNexis Risk Solution, look to help businesses and individuals get included in society, is really looking at alternative data and alternative data sets, which could potentially add to those basic credit data and credit information to help include the most vulnerable in the society, in the financial spectrum.
Thank you. Very good. I think we're all taking away chicken and egg. That's the reason, perhaps. But we remember that bit because it's an easy catch. Jill, your perspective?
Thanks, Eddie, and hello everyone. It's great to be here. So I think some of my personal perspective is that we haven't really facilitated scale. I think that in terms of reach and scale, a lot of things have been done. Nina's kind of given some oversight in terms of data. We have moved the kind of the pendulum, but perhaps not in the most efficient way, because we haven't enabled kind of scale and reach to the people that really need it. And I think what we do kind of at Visa on a day-to-day basis, it's very much been focused on fintech. It's very much been focused on reach and scale. And whether it's kind of like Fintech Connect, which is a whole load of fintech partners that we facilitate to all of our other customers across the ecosystem, or whether it's like Fintech Fast Track, where we just enable fintechs to be able to access and connect to our network. I think players like us, industry players, have to facilitate scale to really be able to kind of address this big, hairy, audacious issue. Else we just aren't it's going to be these small little increments that just don't seem to amount to much. So I'll leave it there. But for me, I think it's a reach. And it's kind of thinking about how we enable fintech, particularly, which seem to have a lot of competitive solutions, to be able to overcome some of these problems, whether it is just access in terms of they don't have a lending score, they don't have a credit score, they can't get access, or whether it's simply offering other facilities around budgeting, or just making digital payments kind of feel more inclusive in terms of who they serve. But I think it's very much about scale and ensuring big business, like all of us today, is facilitating that kind of scale and reach.
Thank you. Thank you. That's an interesting point, isn't it? There's certainly enough talent out there. There's enough fintechs out there. There's enough great ideas. It's how do we get that to really land at scale? So Faith, some thoughts from you?
Hi there. Yes, the way I was thinking is that we've always had, and we continue to have, a challenge with the poverty premium. So it means that the people who have least contributes.
You've got a bit of a problem with your tech, Faith, because you're breaking up terribly.
Oh, really? That's frustrating, isn't it?
Do you want to move to BIM, and do you want to restart anything, or do you want to press on?
I think if it's breaking up, I'll BIM and then see if that has any difference.
Okay, we'll come back to you, Faith. Maybe we'll just ambush BIM and say, would you mind picking up for the
Fine.
where you think?
So I often, to address your question very directly, there are, I think, two key problems with financial inclusion. The first is the word financial inclusion. I'm yet to meet somebody who actually knows what that means. And what I mean, and I'm not trying to be sort of funny or facetious, I just mean that it really doesn't mean anything to an ordinary person. Is that including people in financial services? Well, people are included, right? Like, if you want to get an account, people will say, well, you are already included. What we really mean by financial inclusion is people having access to everything that everybody else has access to. That's really what we mean. And I just think that it's always the agenda's been hampered by the word. I just think it sounds technical. It's not really very warm, and ordinary people really have no idea what it means. And that includes politicians who are sort of, as you know, deeply ordinary. So I think that that's one issue. But more fundamental is that really you've got to talk about the problem at source. I thought that Faith's point was very good. And obviously I have no original ideas, so I have to borrow what other people say, but it's very good when she talked about poverty premium. That is really the key point. It's people who don't have enough money, right? Like you can spend all this time, you know, and actually I thought Jill's points about scale were very thoughtful and intelligent, and she's obviously right. You can, when you've got scale, you can provide things frankly free to a large number of people, because the people at the top end pay so much money for what they do that it can pay for everything else, or the government can force people to do stuff. We do that with bank accounts, for example. The government can force more people to do stuff. So the fundamental problem is when people don't have very much money, they end up paying for more stuff. And we see that in terms of when you have an overdraft and you get charged, when you have to use a payday lender. So there are products that come on stream. I've come across companies that are doing things like giving people access to their money before the end of the month, so that they can spread their payments much more effectively over the months. In the United States, people are paid every 2 weeks typically, rather than every month. Those are the sorts of products and things that people can do. Those are very practical things. But ultimately, we have to end the poverty premium. But you can't end the poverty premium unless you're prepared to do one of two things. Either expect industry or certain organs of industry, would be banks or other financial services providers, to take loss, because the reason why there's a premium charged is that those people are more likely to default or run away or not pay or whatever. Or the government's going to have to take the loss by ensuring that activity. It's my sense that when it comes to savings, pensions, those sorts of things, more complex financial products than pure bank accounts, I actually think that there's a combination, depending what it is, of the government and industry having to take the loss. But in addition, there's also an even more fundamental problem around people just not feeling comfortable and trusting online activity. A couple of my cabinet colleagues, when I was in Parliament last week, were telling me, I probably shouldn't tell who they are because this will probably get broadcast and it'll be like on telly or something. But they said to me that there was one of these scams that go around online, and it was Royal Mail was one, and another one was to do with people's bank accounts. So they knew what bank these particular ministers banked with, right? And then they emailed them with this stuff. And both of them said they were this far away for properly falling for it. Now, as I say, look, politicians aren't, you know, always the smartest in the world, but they're not dumb, and they do know they're broadly financially literate. And the fact that people in that position could have almost been done by online scams just shows you the danger of it. This matters because significant numbers of people, often older, often less comfortable with technology, do not trust doing stuff online. So that when the industry does stuff that like closing branches in towns and villages across, well, there are barely any in villages, in towns across the UK, that makes the problem of financial inclusion even harder. So what's my solution? One is the government can sort of, and the FCA should just lean on, and if we need to legislate, we should, and just say, you've got to keep a branch in anything, in any settlement that has a size above, which is a population above X. Or we could do that. And secondly, we need to get rid of the poverty premium. And that's through a combination of industry taking loss and government taking loss. And if you did those two things, I think you can make a significant difference and employ somebody really smart and dynamic and charismatic to come up with a new name other than financial inclusion, because I think it's the worst name for this agenda.
That's terrific. That's terrific. Thank you. That was nice and simple. There's some very good messages in there. Faith, do we want to go back, or could we go back?
Okay,
to you now?
shall I give it another go? I think Bim's covered everything. So I'm what should I talk about? So
if
no,
anybody has questions for the panelists, by the way, please use the chat. I see there's nothing in there nothing's in there that I can see yet, and pick questions from the chat. Sorry, Faith.
No, that's fine. And I do encourage everybody to put questions in, because it's a really interesting area. So I think exactly the poverty premium is a real problem. I think that there are some technological solutions that can help with that. So for instance, thinking about branches, one of the tech solutions or fintechs that we're seeing is called One Bank, and that's offering a local pop-up branch for all banks, which allows people to access cash as well as access open banking products, offers human help to make sense of financial services and help people open bank accounts. And I think that's an interesting way where we can begin to see technology and different sorts of thinking coming through to make services more accessible. But I think the other thing that we have struggled with is a lack of inclusive design. And so this is the sense that typically firms have approached, services with a one size fits all, or here are our segments, these are these are the ones that are going to make us money, let's provide a product or a service for them. But actually more and more consumers are looking for services that are much more sympathetic to their needs. And if you think about it, at any one time, there could be as many as 50% of the population who are experiencing circumstances that might make them less financially resilient or more susceptible to fraud, for instance, or struggling with a health issue, the bereavement of bereavement or the loss of a partner. So there's this sort of sense that actually we need services which are much more sympathetically designed. And one of the ways which I'm kind of aware of and involved in with consumer and civil society organisations is thinking about what is the partnerships that we see? Where is the real strong consumer voice? We've got lots of organisations that focus on vulnerability, on inclusive design. I'm thinking of facilities, resources such as, the Vulnerability Matters podcast. UK Finance do a cohort training, which is there really to connect organisations and the staff within organisations with people and experts who can help them understand how to design products and services in a much more sympathetic, consumer-centric way. And I think there's one thing we'd look to government for, and also to industry, is that actually that there were a stronger voice was given to consumer and civil society organisations and more partnerships. So a good example of another partnership is with an organisation called Surviving Economic Abuse, which has developed a partnership with Lloyds, and they've been looking at how can we actually design much more sympathetic services that can help people who have been fleeing economic abuse. So thinking about, actually how do we bring the voice in, bring that consumer voice in and get much more inclusive design. I guess the other area which I've just mentioned is the feasibility. So typically in the past, we've had systems that can't respond quickly enough, but now we do have the agility to solve for problems in a new way. The challenge we have now is whether or not those financial commercial incentives are there to actually bring those products through to market at scale, as I think Bim and Jill mentioned.
Okay, Thank you very much. I'm not sure if I should paraphrase that as the wrong sorts of chickens and the wrong sorts of eggs, but it seems to be something like that. Nina, you had some observations, I think, on some of BIM's solutions.
I did. I'm just trying to help BIM understand the process of financial inclusion.
I need help in all sorts of ways.
I'm joking, BIM. But I guess and you make a good point that it is very confusing. What the industry talks about when they talk about financial inclusion is really access to just basic financial services, right? So having a bank account, let's start from there. And that's where I had kind of spoken about the most vulnerable in the society not having access to it. Today, 1 in 4 people, and we all think, yeah, everybody has access to money, everybody's moving money around. 1 in 4 people actually don't have access to bank accounts. That's a huge problem. There are other issues that arise from not having access to bank accounts, and they could be linked to, human trafficking, terrorism financing, and other elements of financial crime. So kind of transacting online, again, kind of linking to what you've mentioned, Bim. Yes, banks are getting rid of branches, and for some of the elderly population, that is definitely an issue. But for financial services sector, and from kind of economic and societal perspective, transacting online and performing any sort of financial services, using any sort of financial services online does help prevent some of the financial wrongdoings and illicit behavior. And that's also something to think about when we talk about financial inclusion. So we are not only just trying to kind of get people involved in transacting and using these services that are available to them, but we're also looking at preventing some of the wrongdoings, and they can, be hidden if cash is the only way of moving money about.
Got it. Thank you. Jill, I don't know if you've been watching the chat as well, but there's a question in there which often comes up, which is, why don't we encourage more industry collaboration? Clearly, Visa's at the middle of a lot of collaboration. Do you have views on that?
I do, absolutely. And I was just listening to Faith there when she was talking about the pop-ups. So Visa's done 3 things, which I guess it will be good to just recap on in terms of access to cash. So certainly we piloted a program with Lloyds, which is now public, which is about cashback with purchase. So basically what it does, it facilitates around 500 communities that have really low cash acceptance for all the reasons that we've spoken about. They don't have ATMs on their high street anymore, and there's been a removal of kind of the access to cash through an ATM network. So what Visa has done is they've facilitated a merchant network to be able to provide that cash out with a purchase. What is in pilot at the moment is to be able to facilitate cash without purchase. So a similar kind of community or a similar network of merchants within the same community to be able to provide cash out without a purchase. And again, more coming soon. You heard it first here, but we are looking at a cash in type of solution, which I think will be brilliant for some of our small and medium enterprises that are still taking cash and then don't know what to do with it because they have no access to be able to get it back into their formalized accounting system or structure. So I think we are using our network. We are thinking about this a ton. That's kind of on the access to cash. Then as we digitize and as we've seen this huge shift to digitization, we've worked with loads, particularly in the UK, of grassroots kind of establishments like Shop Appy, like locally, I think it's locally happily, but a number of grassroots organizations to actually get small businesses who haven't previously been or had an e-commerce, any type of e-commerce presence, I guess, to get them online, as well as having their bricks and mortar, which has been closed, obviously, for a majority of lockdown, but to get them online, to get them to be able to facilitate payments online through the likes of Shopify, etc. So we've done a ton of kind of supporting through Barclays, Elevon and a number of our kind of acquiring partners, iZettle, in terms of low-cost acceptance devices, to be able to facilitate that push to digital, because it's kind of been required in most instances because bricks and mortar establishments have actually been closed. So we've kind of done a bit of a push-pull. We've tried to ensure that consumers that want to continue paying with cash, and there's about 2.1 million of those consumers that are very comfortable paying with cash for their day-to-day purchasing and shopping. We've tried to facilitate better network and better access of a network for them through a merchant community. And we've also tried to facilitate that there is a lot more, particularly within the SME space, a lot more acceptance of payments that have digitized because of the pandemic and just not having access. So it's kind of a bit of a push-pull, but we are hugely focused on it. And so much so, I don't know if anyone's seen, but in the audience, but we've done a ton of work of kind of where and how you shop matters. So how you shop matters is very much about supporting your local high street and building kind of a bit of an emotional connection. I walked through my high street over the weekend as it started to open up. It's decimated, like it's sad. I mean, it really is hard to see. That's the fabric of UK societies, it brings people together. So, just building kind of that emotional connection that consumers.
Thanks, Jill.
High streets.
Good. There's a number of points in there. Bim, you're an expert on collaboration. You work in the Palace of Westminster. I'm sure there's plenty that goes on there. Do you see enough cross-industry collaboration? I mean, between retailers as well as financial services providers, plus some of the organisations producing things such as Faith mentioned? Do you think we're collaborative enough? One challenge, one team?
Well, I'm not really sure it's the right question, right? Like, you can look at any industry and go, well, they should be collaborating to achieve things for the greater good, but that just isn't how most people operate. It makes sense for some players. So Visa, of course it makes sense for Visa because they sit at the middle of everything, right? So more collaboration is more money for Visa and more bonuses for Jill, which is good because I think Jill deserves more bonuses. That's good for Jill and her family. But the truth is what you've got to look at is the incentive structure. So what is the incentive for any individual player? There is either a commercial incentive or a legal one, or at least avoiding a disincentive, i.e. somebody banning you or doing something bad to you, right? So that's really what you've got to think about. What are the incentives? The problem around cash, access to cash, which is something I've spoken to the Treasury about several times, is that governments have always been desperate to get rid of cash. Because when you get rid of cash, what you do is you can track payments. And when you can track payments, you stop fraud and you increase the amount of tax you have. This is why governments have always been in favor, where they can, of getting rid of cash, though of course not precluding it, but making it harder and harder for people who otherwise could use not cash to use, a non-cash payment. But that obviously has a negative externality, which is that you exclude people, right? So really, in terms of, sure, we're being collaborative enough, well, probably not, but that isn't what people are paid to do. People are paid to do a good job by their business in a legal and sensible way. So we have to change the incentive structures. That's why you need to look at the law and the regulation more than law, I suppose, and think in X particular area. And it's important to be quite granular, right? Because it's different in different areas. So let's take auto enrollment and pensions and what happens to those investments. So now we've actually got a pretty good system, which I think we copied largely from Australia, the superannuation system they have there, but other countries have done it. It's a very sensible system. I support it very strongly. So now pretty much everybody is paying into a pension of some kind. Okay, what happens to people who are paying into that? They're not earning very much money. They're paying into it. They have absolutely no idea what's happening to that money. That money is being taken from them. Frankly, it reduces their day-by-day income because some of it's going in. Now, is that a financial inclusion issue or not? The fact that those people don't have access to that, they've no idea what's going on with it, whereas somebody earning, I'm making this up, £200,000 a year probably has a bit more of a sense as to what's going on there and is quite concerned by it and might overpay or might underpay and is thinking about it. Is that a financial inclusion issue? I think it is. Why? Because that money really is going to represent the small amount of savings that person's going to have at the end of their career. But the way we deal with that is often, frankly, through regulation, smart regulation, to make sure that the incentives are aligned with the individuals, the vulnerable individuals, and the industry in whatever sector you're in. And it's really important when we talk about this issue, not to talk in too general terms, because it's just such a big subject. Everybody ends up talking around it. So you've got to look at each different area, and people like Visa are really important because they see more capital flows. I remember when I worked in M&A in the city, I remember doing a deal for American Express, and it was just amazing going through and just seeing how much they knew about spending and who did what. I mean, it was actually pretty scary, and that was several years ago. I suspect now it'll be even better. So it's understanding each different segment, going into that area, getting the players around the table, understanding what is stopping collaboration. Usually it's commercial incentives, and then working out how you deal with that. But I think that that's really the answer, rather than, because obviously the much easier way of me answering your question is, no, we should all be more collaborative. And then everybody will say, of course, oh, yes, we'll be more collaborative. And of course, then they'll go away and not be more collaborative. So for me, that's how we got to deal with it.
And that's what we've seen. That's all often a lot of what's behind why haven't we solved the problem so far. Faith, are you picking bits out of that make you think that there's a willingness to deliver on the things you think work?
I think, listening to previous contributors on today's conference, I think there is a real tussle over data and the data infrastructure that we need in the UK, and how much it should be mandated, how much should be voluntary, and whether we should be collaborating or not. And I suppose from a financial inclusion point of view, people don't have a high willingness to share their data. So I think the Financial Lives data set recently published by the FCA shows that actually willingness to share data among consumers is really low, because they really are worried about what's going to happen. They're worried about security, they're worried about privacy, and frankly, they don't trust financial services, generally speaking. They've been exploited in the past, they've been ripped off. So now, should they put themselves at even greater risk by sharing their data and then expect to get better services? So I think, there's a real opportunity with things like open banking and open finance to drive much more personalised services, many more niche services that would serve financial inclusion, offer greater control, more prompts, more help people avoid fees and charges that they don't need to pay, all of that kind of stuff. But at the same time, there's this sort of uncomfortable underbelly, which is, what happens to my data? Where does it go? Who does it get shared with? Is it safe? And I think that's where this point around competition and collaboration comes in. Are we competing or are we collaborating? And I think for things like our infrastructure, our data infrastructure, we need to make sure that we have got very clear rules of the game. Everybody applies the same rules. And actually, open banking has thrived in the UK, where it hasn't in Europe, because we've had standardization, because we've had API standardization, we've had some rules put in place, we've got clarity, but we're still missing that for other sectors. And we're still missing that around things like, how does a consumer get redress when their data's breached? Okay, sometimes they might be able to access FOS if they can prove that they've had identity theft or it's created a financial loss. But what is the reputational loss? Or what if that financial loss is much further downstream and they can't identify that? What kind of redress do they get then? Well, there's no access to individual redress through the ICO. So some of these issues around, what kind of data infrastructure do we need? That needs collaboration, and that needs not just the industry to come together, but also government to help set those guidelines and set the parameters. I'm not suggesting that government should overstep or that regulators should overstep. I think Siobhan was warning against regulators overstepping, but I do think there's a role for the industry to start living what it's talking. So if it says it should be outcomes and principles based, what are your outcomes? How are you going to deliver on those? What's your roadmap? What's your evaluation? And then gets that signed off by a regulator. Let's see, that you're really kind of living what you're talking about. And I think that could be really helpful in creating that balance between government, regulatory intervention to set the direction, industry coming together, convening and reporting back to the regulator saying, this is how we're going to do it. This is what we're going to deliver for consumers, and this is how we're going to measure it. So that's where I think we see that come through.
Thank you. Yeah. So it feels like more regulation. Because regulation's popular. This is good.
No. This is very important. Yeah. Now, I love our regulators dearly. Some of them are friends of mine. Not that many, a few. But it is what we have seen with COVID is huge expansion in government's reach into everyday life for all sorts of reasons that everybody understands. What we've also seen is industry, and in every financial sector is no different, often say to politicians and government, please regulate us. And the reason why is because they're scared of inadvertently making a mistake and getting the wrong side, but also once you understand the rules of the game and you and your 5 competitors have also drawn up the rules, it makes it a lot harder for anyone else to come in, or at least if they do come in, you can see them coming. And so there is just a very fine line between working out how this works. So that's why I think we just have to be very, very careful. It's about dealing with it's aligning the incentives so that the incentives are right for the industry players to do what we want them to do.
I think that's right, but I would challenge you a little bit, Bim, on it, because I think the key, one of the key things that is for consumers is that they're presented with choice. You can choose to share your data. You can choose which product you want. Financial services is exceptionally complex. Okay, it's not easy. Even to choose a basic bank account, I have to work out what are the variables of that bank account I should be choosing just for me before I can make that choice. We're now adding in this opportunity to have more personalised, flexible services that meet my requirements, but we're saying, but you need to choose whether you want to share your data, which somehow means I need to check, well, what's this company doing? It's all wrapped up in a privacy notice that I can't read, is indigestible and unintelligible, not just too long, but unintelligible. And then we say, well, that's choice. We want to keep that. We don't want to create regulations. So I think there is that balancing act between actually setting rules of the game so that it's safe. I don't have to think when I turn on the tap and drink a glass of water. I don't have to think about whether the plumbing is safe. I don't have to wonder, oh, is Coke going to come out of my tap today? Or is it water? Or is it gin? Because we wanted competition in plumbing. We don't have that. So I think there's something around keeping data sharing as safe as pouring a glass of water.
There's something there about the regulation and getting the line right. I think Hugo's going to come and tell me that we're out of time very soon. So perhaps we just have a quick whistle stop around. I was going to ask, each of the panelists, what can we do? We've talked through some of the big ticket issues. So what could actually give us, what's the most important topic that would give us a great leap forward? Is it grappling with regulation? Is it consumer education? Those sorts of ideas. I'll go in the same order as before, Benina, then Jill, then Faith. But perhaps, Bim, you could be the judge and award gold, silver and bronze for the best idea. Get us to the end. Or perhaps not.
I don't have to have any ideas, do I?
No, you don't. No.
Oh, good, because I don't have any. So I've given you everything.
We've
really have nothing else left.
Let's get some ideas. We start with Nina's best idea then.
I feel under pressure now, Eddie, but thank
you. Indeed. It's the end of the day.
Look, I think, I've touched on this at the very beginning. I think access to alternative data for financial services is extremely important to help include underbanked and unbanked. And alternative data, again, one of those terms that we use that nobody understands, Bim, but to help explain that, it's really access to public and institutional data. So it really could be anything from educational backgrounds, criminal history, professional licensing, and having access to some digital data, digital behaviors of individuals could help include those unbanked in the society.
Great answer, Jill. No pressure.
I think the same. I mean, I think Bim's point is spot on around there has to be commercial incentive for industry to come together. And I think if industry came together, we'd get the reach, we'd get the collaboration, and we'd solve this more inclusively as an industry. And demystify this whole, I love that idea of just demystifying financial inclusion. What is that? Like, what are we actually saying we want to do? So create a bit of a charter in terms of what we want to do and stop calling it financial inclusion, because I don't think that really explains what we're trying to do. And then bring industry players together that have the right incentives and collaborate and get scale and reach.
Easy, we can do that.
Easy.
We can, well, we can, we should. Why shouldn't we? Faith, you can say why we've got a new idea.
Yeah, I've got a few different ideas. No, not better ideas. I do think align incentives, absolutely top of my list. Create digital inclusion. We still have 11.7 million people without basic digital skills. That's 9 million people who are struggling and can't use the internet or devices for themselves. So I think we've got to crack that if we're going to crack financial inclusion, and ultimately ensure diversity, make sure the Equalities Act is being implemented in firms, actually the people who are most likely to be excluded actually have several protected characteristics. You know, race, sex, health, all of those things are where people are suffering most, where they are in minority groups or women in gender, etc. So I think we need to make sure we have diversity in our skills, in our workforce. It's absolutely essential that we have much more balance in the workforce, and that we're recruiting and thinking about how do we make sure that we're building an inclusive society with an inclusive workforce. So that was the other aspect I wanted to bring in.
That's good. I think you cheated and had 3 different topics there, or 3 different ideas. So we'll go with just the diversity as your idea. Bim, gold, silver, or bronze?
I'm not dumb enough to pick. Who do you think I am? I think they're all brilliant ideas, and we should do this in person, because I don't know about you guys, I'm just sick to death of doing video calls. So we should do in-person things. So after this, you should send a note to everybody and have an in-person big drinks event in July or late June, because if we don't stick to the roadmap, then we've got bigger problems. So I think that is my takeaway.
And Hugo has appeared on. Thanks, Bim. Hugo's appeared on screen because Hugo's going to arrange the drinks in July, and we're going to come together and solve the problem. We're going to be diverse. We're going to get the regulatory angle right. We're going to get all the data we need with all of the permissions, and we're going to build a bit of trust.
Can I just add something? This is now just like turning into my getting things off my chest. But and as a former corporate lawyer, I have sympathy with this. The gobbledygook that is put together in financial services drives me completely batty. I don't mind it when it comes to prospectuses and things, because the only people that read that are themselves people who sort of train to read it and need to read it. But like the stuff that I get when you invest in something or your ISA fund or whatever, it's just so maddeningly complex. Nobody reads it. I have no idea why the GCs of companies like Visa and various other big players do not go to the regulator and say, here is like a 2-side, 3-side version of what you've done, and this can be more comprehensible. Can we say that? Can we say this to our customers? But I guarantee you, if somebody could do that and make it comprehensible, whether it be data, whether it be what you're doing, people will actually prefer to go with you. So I actually understand what they're doing. I just think it's a small thing, but legalese really turns everybody off. And that includes lawyers.
That's a great answer. We've got 4 ideas now.
There we are.
So Hugo, we'll mull those over, and we're coming back in July, and you're buying the drinks, I think was where we got to very roughly. I hope we're on time, and I hope you enjoyed that and you feel a little less stressed today.
Perfect.
Thank you to the panelists from me. You've been a delight, all of you. I've really enjoyed it. Hugo, thanks for inviting me. I'll leave you to do some closing words.
Perfect. Thank you very much, Eddie. Thank you very much, Bim. Indeed, I'm actually working on the reception to take place late summer. So we're also looking forward to meet in real life and in person with our members on the ecosystem. So we'll be in touch then. We've not solved financial inclusion, but we've had an insightful discussion, which give us some directions to make some progress. So the conversation is not over. For today, it's time for us to come to a close.